welcome to this webinar session of our program. So here, so many individuals have been requesting for me to like why a sudden shift of market price, why suddenly the market was pretty bullish and all and not. The market was pretty bullish and all and not. So I kind of like, all right, just rather than answering the question each, I rather do this video, this entire video, and definitely share it for anyone who has same question to definitely have an answer for it. So I'll definitely focus more because the most currency pair that was really demanding was the euro US dollar, you know. So I pretty put that through already. So I will definitely analyze that. So we will definitely first before the week I am going to do a replay mode for us. So I'm definitely going to kickstart the week and we move forward to show you how you would have definitely done and the reason for it. So I'm definitely going to explain this technical base. I'm not going into fundamentals. So because some traders are here, though I recommend traders analyzing fundamentals, but there are some people that have willingly taken upon themselves not to trade fundamentals. So I'm definitely going to go technical base. So it's simple and straightforward. So this is the GBP USD chart. So I will definitely start with, I'll begin with the Euro USD chart. So right there. So taking a look at this, I'll pretty start the week. So now before we begin the week, all right, let me have a replay. Let me clear every stuff on my chart. Okay. So before I begin the week, you can probably see the market right here. This is a 15-minute time frame. So very first thing, I trade the 1 hour time frame, not the 50-minute. I do trade the 50-minute time frame based on session liquidity, you know, so to grab fast move and stuff like that and fast take profit. So literally before we begin the week, let's say this is Monday. Yeah, this is Monday. So if we definitely put into account to start this on Monday, okay, to begin the week this right here. So we would probably understand that moving on to this, we would have definitely done a top-down analysis. You understand? So you do a top-down analysis and you understand the overall view of the market in order to know your sentiment and know what to expect whenever you see whatever price action you experience in the market. You at least have a clue of what the market is doing. So I will definitely start with the monthly time frame. You know, and it's pretty been a while that we haven't analyzed this time frame. You know, so regarding that, if you pretty see this, all right. So this is our monthly chart, as you can see. Let me zoom that in, so you probably understand this. This is a chart. You can probably see that dating back right up to 1971. So the market has pretty been bearish, as you can see this, since the great financial crisis from 2008. So Euro USD has been definitely trending bearish, you know. So that's that. And taking a look at this, since you're trading the smart money concept, so for trendline traders, they are pretty looking forward to buying. You know, you switch to this chart, you definitely roll that like this. So they are pretty much buying ready for trendline traders. So they had a break, retest, and they are definitely buying. So these are for trendline traders. So trendline traders are definitely in a buy entry right here and targeting this high up here. So we aren't trading the trend line here, though we use it as multiple clue for liquidity and stuff like that. So right here, your very first thing you want to map out is your adjustment. You know, the very next structure. So we probably have this high right here, as you can see. So we have this high, and we had this low. So we probably had this low, and this is the most recent low based on the money chart. So with this low, you probably had an inducement here based on this time frame. Yeah. So you probably had an inducement there. So with this inducement, you had this acting as a change of sentiment should in case price moves to the upside. You know, you definitely have that, and a break of market structure to the downside. So that was about it then. The next inducement we had was definitely this high. You can probably see that, and so we definitely put this. So looking into this, since this is our most recent structure, so I will definitely zoom in for us to see this. So looking at this, we have this inducement taken out, this inducement here taken out, we probably had this valid. All right, so this, taking a look at this, we probably have what we probably have this as this is our order flow, so this is the point of interest and a refined order flow, which is known as an order block. So this is an order block. So we probably had initially we probably had this order flow. This, it was mitigated, and you probably saw price moving to this downside. But we are interested on this the previous trading week, and you probably had this, so we are probably interested here. So the reason why you would definitely see this, you would have definitely price definitely moved into this, and price was definitely trading inside this extreme order block, because there's no other block apart from this, unless you have this high here, which price might take out this high sweep and price move to the downside. But we are expecting price to move to the downside, because this is a point of interest right here. Since this time frame is pretty high, and we just cannot execute trades directly, so this is just giving a close shoot in case we have any sell weakness on the 1 hour time frame. We can definitely push sell. Or on the 4 hour time frame, we can definitely, the 15-minute time frame, that's some session liquidities, we can definitely sell for the short term, because we can definitely sell for the short term and move price for the long term based on the current sentiment, because this is the money chart, guys. We're talking about the money chart. So we move down to this time frame, the weekly time frame. So taking a look at the weekly time frame, we pretty much have same scenario, which we have this low, as you can see here. We probably have this and definitely that. So based on the weekly time frame, we pretty have structure during this correction. During this correction, we pretty much have some structure being broken to the upside. So we have this internal structure here, as you can see. So price kind of moving bullish. You have this inducement taken out here. So let me just put this for you to see that. So this is an internal structure, price kind of moving to the upside, and price approaching this zone right here. So this zone right here. So right here on this time frame, it hasn't mitigated yet, since we already used the replay mode. And if you probably take a look at this time frame, you have these highs being swept. You probably have the next this high. All right, so price is kind of moving to the upside, and price breaking to the upside, so this high been definitely. So we have this. So right here, the market is this correction is still bullish. You can probably move price to the upside, So this is the monthly order flow. We have the monthly order block. So this is just acting as a reference point for us. Like when price mitigates it, we can definitely have sales and definitely like that. So looking at this, the market is pretty bearish on a normal structure, and this is a correction which we have an internal structure shift to the upside, and price kind of like we have some weak, some price kind of like rejecting from the upside, having some buy side liquidity. So moving down to the daily time frame, we pretty much want to analyze the daily time frame. So looking at this, you probably see that the market turns bullish. Understand? So we have this, which the market definitely turned bullish, price moving back to the upside. And taking a look at this, you probably have this, which we had a change of sentiment. So looking at the most recent structure on this time frame, we pretty much have this acting as our liquidity on this time frame, the daily time frame. This, then we probably have this high, which was broken. All right, so we had a complete candle closure there from here, and we have price moving to the downside. And so here the market is pretty bullish. So you can probably see that the market is pretty bullish because this is structure, and here we probably have a change of sentiment on this time frame right here. So this is a change of sentiment. This is a change of sentiment right here, and we pretty have the market being bullish. So right here you probably see that on the daily time frame the market is bullish, on the monthly time frame is bearish, on the weekly time frame is bearish, and the correction the same on the monthly time frame, the correction, and the weekly time frame we have this as a rejection, this price up here as a rejection, while on the daily time frame it's pretty much a close, a candle closure, and price moving back into the trend and having what this price moving back up. So the market is still bullish though. So we move down to what here we are definitely expecting price to move to the upside, right? So we would definitely continue our buys and definitely see that. So but before we continue our buys, we'll move down to the 1 hour time frame to see, because this is the time frame in which we want to trade. So we definitely have a clue on that time frame, on the morning time frame, the weekly time frame, and the daily time frame. So the morning time frame should in case, since the market is pretty bullish. So before I get there, let me just explain, let me analyze this to see if the market is bullish on the 1 hour time frame, then we will definitely continue to buy. Since we're trading the 1 hour time frame, we'll continue to buy and definitely targeting the weekly time frame high and the monthly time frame structure. as sorry, point of interest, which is the order block. So taking a look at this, we probably have this inducement right here. You probably have this inducement. It was taken out and it had this high acting as the next structure, next BMS, and you probably have this low acting as a change of sentiment. So this is a 1 hour chart. So we probably have price moving to the upside, and our new structure, we probably have this inducement here. So with this inducement, what we probably have to understand is that we need this to be taken out and we form our structure and price moving to the upside, or we move down to the 15-minute time frame to wait for session liquidity to continue moving price to the upside. So we definitely going to see that. Okay, so this was the week just began, which we definitely had what this gap. So whenever you have a gap, like I said, I've always been saying this, whenever you have a gap, just wait. That's on Sunday, that's this on Sunday, that's the open session on Sunday. Just wait for that gap to be retested and you kick price to the upside. That's just it. Most often this is how this probably works. So if you were to execute here, you would have executed, since the price action isn't really that the gap isn't really that big for the stop loss to be placed. So you place your stop loss just below here, below this low right here, because price might dip into completely fill the gap. You understand what I'm saying? So before moving to the upside, so if you were to execute here, you take this as an advantage to move price to the upside. So these are for the Asian session traders who want to definitely trade this pair. I won't recommend you trading this because this is not the London session. So if you consider trading the euro, you consider trading euro USD, GBP USD, I would recommend you trade just the London and the New York session. You understand? So I just want to explain this. So I will definitely move this back. So right here, we definitely want to move to the upside. So we're expecting price to, like, trades and stuff like that. Okay, as you can definitely see here, this is the London session. The London session just began, and if you were to execute here, you would have even taken this as an advantage. So like execute your trade during this London open, and you place your stop loss just beneath the level I told you. So this man might come down to definitely close here and refill this gap entirely before moving price to the upside. You understand? So if you were to execute here, you would definitely execute here to fill the gap, taking this gap as an advantage to move price to the upside. So right here, we will definitely target a restore ratio of 1:2. That would be probably good. At this restore ratio of 1:2. So when price move 50% of this, you can definitely go break even, or you definitely close few of your positions. That's half of your positions, and when price take this, you close like one again, and you just you can definitely close entirely. So that would be up to you. So I would definitely recommend that. So we definitely have this entry. So with this as well, so this one as well, it acted, this London session low sweep acted as some additional confluence for you to have executed positions. So when you had still with this additional confluence of this gap, so you probably understand that here the market came all the way to entirely fill this gap, as you can probably see. So you have a sweep on this London session, and you have the single candle order block confirmation, which you definitely had this as an entry. So see, you would have definitely executed here because of this, and you place your stop loss just beneath this as well. So your first take profit target normally is a session high. You understand this one? So you would have definitely taken this high as your first take profit, and you can go break even. You understand? Because the reason why you're seeing this is that if you to consider trading here, then you would definitely place your stop loss below here. You understand? So you definitely place your stop loss below here. Here's your first take profit target, which that's a restoration of barely 1:2, and you can definitely target this Eastern high as well, and this high as well. So this probably this high, and you can definitely target this as well. So let's just take this high. So you probably see that price is definitely moving to the upside. So immediately here, like I said, here you would have definitely waited for price to mitigate this other block that's this this London session low. But you're executing here because you would have definitely executed up here. You understand? So you would have definitely executed up here, and you have definitely been in a losing strip here. You understand? So if you are looking for further confirmation to accumulate positions, you would have definitely taken this as additional confidence, since price took out this London session low, and price moving to the upside. So you would have definitely taken this as an additional confidence, moving price today to the upside. So with this, you definitely replay this to alright, so that price moved to the upside, took out this high and stuff like that. So we definitely wait for the next session, the next trading session, so which is probably the next day. So like I said, while doing this, you switch down to the 1 hour time frame to understand what the market is doing. So you probably have this inducement shift here, and if you probably look at the low, you have this order flow acting as a demand zone, which price might take out this and come all the way down to mitigate that. before price moving back to the upside. So while doing that, you can as well move down to this 15-minute time frame as well, to like keep understanding what the market is doing in order to grab confirmations. So this is Tuesday this week, as you can probably see here. So we have the London session open already, understand. So right here we have this sweep, there's no confirmation, and we probably going to continue watching the market. Okay, so price definitely moved to the upside, and there was no confirmation, there was no trade for us yet. So we probably have what this inducement shifted here, you understand. So we probably have this. So this other block has been mitigated already by this correction right here. So if you take a look at this high, so this is a weekly time frame high, you probably take a look at that. So we have that, which the market definitely moved into that. So moving back to our 1 hour time frame and moving back to the daily time frame to see what the market is doing on the daily time frame, price definitely moved up that high right there. So we're moving back to this time frame, to the 1 hour time frame, to see what the market is doing. And as well, we move back to 15 time frame because we might definitely have some grab of liquidity London session. Okay, price keep moving to the upside, and as you can probably see here, price had definitely mitigated the monthly time frame, as you can see that. So price had definitely mitigated the monthly time frame, and we can expect any sell from now back, because that normally price, since we're trading the 1 hour time frame, price always need to definitely take down the inducement, take out liquidity before moving to its period direction. So we're definitely going to move to the 15-minute time frame to see if we definitely have any confirmation right there. So right here we continue to move. So we definitely wait right on to the next day, the next London session, before we can definitely look at trading any trade. So okay, so right here you'll probably understand something right here. You probably understand that right here you see this. Okay, so let me show you this. So we have this, price has had really dipping into this money time frame order flow, and definitely that. So people can probably see that when price mitigated this, price tried to move to the downside, and price dip into that. So right there, that's this is during the the New York close, so in the night. So probably that. So right here we have this, and moving next, I want to show you this, which you definitely have this as a confirmation. And if you probably take a look at this is a sweep right there, because price definitely rejected really significant, and we are probably inside our money time frame structure, which is definitely acting as additional confluence. So this is a single candle order block. Definitely put that, and during this mitigation you can definitely execute. So right here I said something during this session right here. So where you needed to have waited for this to mitigate, and I said you would have, if you were waiting for this to be mitigated, you wouldn't have had the entry because it didn't mitigate, and you would have had this confirmation, so you wouldn't have executed the trade. But like I said, you had this mitigation because of what? Because of this gap being filled, which you had already placed some trade right here, and you would have definitely, if you missed this, let's say sometimes you don't, if you had missed this to mitigate to execute here, or if you were waiting for additional confluence to definitely execute the trade, you would have patiently waited for the trade to, you would have definitely taken into consideration this particular session liquidity right here, and this confirmation to just execute, you understand, and definitely place your stop loss below it and targeting the highs, the session high and other highs. So right here we will definitely target this, we place our stop loss here, like I said. So here, right here, we have, normally this is our first take profit, the session low. So in case we have our first take profit, you can go break even, you can definitely go break even and target lows, you understand. So you can definitely target this low right here, this inducement, we can definitely target this inducement right here as our next take profit target, because price needs to take out inducement before moving to the upside. And we have first confluence, we have the money time frame point of interest. Next we have the session liquidity, and we have our first take profit target hit. So you can definitely take a second take profit target by using the Fibonacci tool. This, and you can definitely target since your first take profit is 100%, your second take profit target can be this, you understand, this 161.80. that's your second take profit, and you go the take profit target here, or this one. You can take your second the third here, which is this 261.8, and the next this inducement. So these are take profit levels. So right here you can definitely execute. If you were to execute, let's say 5 lot positions right here. You split that 5 lot to 0.05 of multiple positions, so here you take your first take profit target. Right here you can definitely take some profit. Here you take some profit, and finally here. So let's see how that works. So doing this mitigation, price didn't move, price didn't mitigate, price didn't mitigate. All right, so we have the London open, so price mitigated, so we have our execution there, and let's see how it worked out. So first take profit hit already. You have price moving to the downside. There's no London sweep. Second take profit hit. So you probably have there's no London low sweep. So second take profit hit. You have price moving. That's the next day. So you're already at break even. At break even already. Which we definitely had this. Let me show you this. So if we're here, since you probably had this, higher entry here. So this 50%. You can place your break even there. See that, so closing the positions and definitely targeting that, leaving the rest, because this might be taken out and price might definitely move down. So should in case price move down, you want to use that as an advantage. As trade management, that's how we definitely deal with the trade management. So let's say here we need to wait for the next London session. So if you probably take a look at this, you will see that this also we had a confirmation here as well. So price is pretty much moving. We're pretty having some buy side liquidity. We have the AC and high liquidity as well being swept, and a confirmation single on a block, so you can probably see here. So we probably had this confirmation right here. So this particular one, like right here, I definitely send this signal in the channel. All right, so if you're to see that, we probably had this set up right here, if I'm not mistaken. We probably had that EURUSD trades from there, right? Let me see. Probably had that signal right there. Well, here it is. We probably had a signal right here. So we had the first take profit, second take profit, as you can probably see here. So this is the first take profit, and we had second take profit right down. So that's it. Yeah, we probably had this signal for both GBP USD and EURUSD. So we have this already. This was definitely sent, and we have to wait. So here was the entry. We need to wait for the mitigation. Remember, there's no gap here, so you need to wait for the mitigation. Place our stop loss just below that. So this is our first take profit. You understand? And you can as well use the Fibonacci tool from this low to this. You can have multiple take profit levels. You understand? So this is our first take profit 100%. That's already a resource of 1 is so you can get out of the market all. But with our trade management, we want to take this for an advantage, to continue grinding the market, since we have inducement not taken out and we are pretty having liquidity being swept from the upside. That's buy side liquidity. Second take profit target here. The take profit target is low. Understand, this low right here, and you can definitely move down. So we had a final take profit here, this low here. So you can definitely hold on to that and targeting your inducement as well. So for further confirmations. So that was mitigated already, as you can probably see. First take profit target, there was a sweep, no confirmation, and price going to the downside, as you can probably see. So there was a sweep here but no confirmation. If we had a confirmation, then we would have definitely closed these positions up here. So if we had a sweep and a confirmation, we would have definitely closed these positions, the ones you definitely put at break even. So let's say this was 50%, we would have definitely placed this, but this is not as tiny as this one, so we will consider placing like here, just close the positions, profit. Yeah, just secure the positions there and break even, and we continue to see what the market will do. So we'll probably have the next day. Okay, so our positions are still holding. We have second take profit here, target meet, so it was definitely met, and we definitely wait for the next day. So here again, we had this entry right here. So as you can probably see how the market definitely did this week. So you had more of the buy side liquidity. We definitely had this entry right here, and we probably have this confirmation. With this confirmation, we definitely have the mitigation right here. So probably place our stop loss. Probably place the stop loss just a few pips above that, and our target here. So with this one, I as well send this signal in the group. channel, sorry. So this was the next, which this hit take profit, running, everything hit take profit. The one for GBP USD hit take profit as well. So this hit take profit, take profit hits. Okay, let me see that. All right, so this is a trade right here. So this was definitely sense as well. So this is it. So right here you probably had the very first take profit 1.19145. So you probably have that there. Second take profit and third take profit 19, which was around here 19. So if you want to see that again, 19145. So it probably was around here 19145. So this is it. This was our first take profit target. So which the price had moved 1:1 ratio. So we have this as our second, and we probably have the low as a third. So we definitely use what, if you want to use the fib 2, you can as well use this fib 2, and we target this low right down here, or this inducement down here. So you want to target this, you can as well target these lows right here. So when we had this first take profit taken out, price moving to the downside, we went break even with this particular trade. So as you can see that the way I definitely send that in the channel. So I have price moving to the downside and right here. So this one came back, hit our break even right here. It hit our break even right here. So we definitely got out of the market with this first take profit target. And this was because of what? I definitely did this because of this sentiment right here. Because of this bullish sentiment. And this is the reason why I definitely asked them to definitely close those, to definitely consider, because of this buy here, this confirmation. So when this definitely had this buy right here and price moved to the downside, so this is positively correlated, I definitely made mention of them taking out that position when price was still down here. They manually closed these positions here when price was here. All right, so right here, so manually close this despite the fact that this didn't. So there was a possible upside move before price moving back to the downside. So that's it. So let's continue to see what the market did. So right here you will probably see that there was this confirmation right here, which you would have definitely taken this, but the mitigation wasn't made. So we had what, the London session high liquidity grab, this high here being grabbed. So we would have definitely waited for this to be mitigated for us to move. And mind you, we still have these positions still in play, still intact. So probably have this few positions up, target this as our first take profit target, and we target the low, you know, this. So let's see what the market did. So the market didn't go back to mitigate that. So this entry wasn't met. So what you needed to have taken here, so we would have continue with this trade until hit our take profit target, our final take profit target. Let's see that. Definitely it did hit the final take profit target before the market closed. You can probably see that. So it hit our final take profit target before the market closed on that Friday. So this is basically how we traded this week, and it was really a success. All right, it was really a success. So it wasn't like, this was definitely how we traded this week, based on the entire confluence, based on that, and based on that. So a lot of people were doubting why we had multiple entry sales, sell entries. We had this monthly time frame point of interest as a confluence for us to confidently continue selling and targeting this inducement right here. So that is practically it. So while looking at the 1 hour time frame, we would definitely continue. We'll patiently wait for the market to see if we have further sales to target this demand zone right here, this order flow right here. Price might as well open. We have a sweep of this particular inducement, and price move back to the upside, and yeah, that continue. And as well as price might just continue moving to the downside, since on the monthly time frame we are expecting price to like move down to this zone right down here. So we will definitely watch that closely and see how the market reacts to it, you know. So we patiently wait for price to do whatever it's doing, price action. If we're selling, we're selling. If we're buying, we're buying. And should price mitigate here, we wait for a lower time frame confirmation, and that's it. So right here, I will definitely make another video for GBP USD to show how we definitely trade GBP USD. So if you definitely, no, I won't do that yet, but if you definitely want me to analyze that, I can definitely do it. How we definitely have the positions we had this week. As you can probably see, we had multiple positions for this week. So this is This week was pretty good. So as you can probably see, the week we started with these sells, GBP USD, Euro USD sells. We definitely moved down to this partial take profit taken. You can probably see that this for Euro USD. We definitely moved down. So partial. This is for GBP USD. We had this take profit hit. We probably have this take profit hit for Euro USD, for GBP USD. First take profit hit. Second, we probably have Euro JPY buy levels. We definitely have these entries right here. First take profit, this zone. 160, that's the restoration of 1:2 already, so which this definitely hit. We went break even, so first TP hit, that's already restoration of 1:2, so we went break even. So this is GBP full TP, which we definitely hit, and we definitely have, okay, this is a BTC trade which definitely gave last, this is it, so definitely gave this. So moving back to the downside, we have this BTC sells right here, and we have Euro USD full TP hit as well for the very first entries. That was and you probably see this. All right, this is Euro USD, the one I just showed. So price moving to the downside. We have multiple take profit levels. So this is USD JPY buys. You probably have that. So you have this entry. So I forgot to give the refined entry of this zone, so in case people who have small account sizes can definitely execute based on this. And we have this progress. We have some go break even for this Euro USD trade. As you can probably see here, this is what I said. So this is what I was explaining when we had this entry right here, when price was definitely around this area. So I probably saw the price action on GBP USD and probably gave this, so for these people to definitely go break even, and because first day profit was hit already, so second day profit target. The buys on this, all right, this is the trade I was saying on the buys on GBP USD. So they will probably had this GBP USD buy signal scalp when the market was definitely trading bearish. So this signal made me to definitely definitely go break even here. So we definitely have these buys, and we definitely have the take profit hit for the buys GBP USD, and we have the trade on USD JPY, which definitely moved to the upside and definitely hit break, definitely hit 50%, more than 50% of the trade, which we had our first day profit hit already, and definitely go break even. So the trade is definitely still in profit. So right here we have this progress on GBP USD, that's USD JPY. As you can probably see here, we probably still have the signal right here, so it's still in play, as you can probably see here. So this is our break-even trade. This is our break-even right here. So price didn't mitigated, price didn't trigger our break-even, and price moved back today to the upside. So we definitely have that in profit, and we probably have this already. So that's basically it. That's basically how we definitely traded this week, and that is it. So thank you very much. So if you want me to do a breakdown analysis on GBP USD, you definitely do that in the comment section. I will definitely choose the currency pair. I will definitely do the top down analysis for that, and the weekly breakdown of what we did on GBP USD. So thank you, and stay put.